I've got a lot of material that I'm going to try and compress into the 15 minutes, but I understand that we might have a little flex after for a little chat with Shane. The topic is not what was advertised on the program. We're talking about digital infrastructure, but I'm going to present this through the lens of a board game. And I think a board game is a super useful analogy because what a board game tries to capture is a little micro universe of how shit works in general. And I'll explain that in a bit. But first, a very quick intro, myself and BCB. I graduated in 2003 with an AI degree and worked at Lehman Brothers on the credit derivatives desk, the CDO desk. I moved to Barclays in 2004, where I carried on doing much of the same in a kind of a quanti geek role, and did my MBA at City of London University, where I met my co-founder, Oliver Tonkin. Working in credit, I was kind of at the front seat of what happened next. Of course, most of you will have seen what happened next. This also inspired a lot of the ethos behind Bitcoin, which of course had been developed over 25 years, component by component, but was finally out there in 2009, where of course that headline was embedded in the Genesis block of Bitcoin history. I started talking on forums in 13, 14 as Bitcoin Bro, which may or may not be the origin of VCB. Let's leave it there. 2014, my interest and immersion in the crypto space grew. BCB Prime was formed in 2017, which is a trading service. BCB Payments was formed a little later, which is a banking it's a payment rails for the crypto economy. BCB Group is the group entity which encapsulates everything that we do, the API, Blink, and all that good stuff, bringing us forward to today. Now I'm going to read the slide. We're the crypto industry's, I think, most popular and capable B2B financial institution for payments and foreign exchange in all major currencies, with services that also include crypto liquidity. We still do what we did in 2017, buying and selling crypto, investment and storage. We've done about 150 bill in payments volume. We've got hopefully 300 clients by the end of the year, and one purpose, which is to connect and bank the global crypto industry. Last slide on me and BCB. These are a handful of our clients and a handful of our investors. So the board game analogy. Why I found this useful, and I'll introduce the structure. I'll then walk us through what that meant for Web 1, Web 2, and Web 3, what we can speculate for Web 4 and beyond, and why it matters. So this is the way I see it. A board game has rules. In those rules are definitions. We have permissions, what you can and can't do, and we have governance, who actually controls the rules and enforces them. The setup involves a platform that's generally a board or tiles or whatever. It has a layout, and I've included that point to illustrate the centralization and decentralization as we move through the digital eras, and of course the players, who's playing. When we get into gameplay, we need to understand how do we interact. We need to understand how do we make meaningful choice or are subject to randomness. And we need to understand what are the conditions for success or the conditions for progress. And then we score. We need a unit of value to score your progress. We need incentives and penalties to drive that score, and we need a mechanism to transfer those incentives. And underpinning everything is a unifying theme. So thanks for bearing with me so far. This is kind of a new way I'm looking at things, and this is a work in progress, so you're on with me on a journey. Next time I deliver this, it might be a little more sophisticated. But let's see how that maps onto the three eras that we've passed through in Web. So in Web 1, the definitions were broadly captured by W3C, the consortium. The rules were really at the code level. You needed HTTP to know how to move the HTML, which is the structure of the page, and a URL to actually find it. The governance was super wild, a bit like the beginning days of crypto, but that's the structure of Web 1. The setup, I'm going to race through these because this is not a history lesson. It all takes place on TCP/IP. It's pretty decentralized. You can set up a server, host a page. It didn't have the kind of Google Cloud, Amazon, AWS kind of thing we have today. And of course, super business and consumer focused. This is where things went off the high street and online. So that's the essence of the gameplay. Where do we talk? What is the what is the meaningful choice element? Well, it's just vanilla capitalism. It's just who's selling the best thing and marketing the best. And how do you win? How do you progress? You beat brick and mortar. The scoring is money. I guess the incentives drive first mover advantage. They drive market share, and to pay, I guess, was all PayPal and credit cards. The theme, of course, being e-commerce revolution. Roll on Web 2, and we have rules that are, I fucking hate this word, folksonomy, but it is a word. It's like a taxonomy that's generated by hashtags. We define what the content is by slapping on a hashtag freely, and those gather form in a crowdsourced way. The rules, I guess, driven partly by business regulations, vanilla business regulations, but also by the content creator. Content creators create the mood, the trend. So setup, well, this all takes place on big social media. The topography, the layout is very centralized. So now we've got these big personal data gatherers, Facebook, Insta, Twitter, whatever. And of course, the players, influencers, subscribers, advertisers are the main players in Web 2. In terms of gameplay, we gain traction through likes, shares, comments. The meaningful choice component has a bit more of a random element. At first, virality was a driver of success, which was quite random in the beginning, but now, of course, there are techniques to go viral. And you win by monetizing that virality. Scoring, the unit of account, again, this is all up for debate. This is my own idea. It's like followers, it's content. That's now the new currency, new Web 2 currency. It's driven by reputation and reach, and it's shared across cross-promo and reposts. And of course, Web 2, the self-publish era. Roll on Web 3, this is why we're here. This is a little more interesting. What are the rules here? So there is a convergent taxonomy, and this is a really key element for progress. Each regulator in each jurisdiction is starting to get their heads around what is a security, what is a unit of value, what is a utility token. So right now it's quite disparate, and everybody has their own idea, but it is starting to converge on standards. The rules to play, well, on the, let's call it the TradFi world, is KYC and AML. These are table stakes. And code, finally we have a system in which incentives are run and ruled by code, which is a very exciting thing. It makes it a lot more transparent, a lot more meritocratic. These are governed by regulators, super important, by DAOs, and by individuals. The setup. Oversimplification maybe, but this exists on layer 1 blockchain nodes. It's semi-decentralized. I say that because if you take a deep dive beneath any of the layer 1s, it's really hard to find true decentralization. If in ETH you still see massive pockets of concentrated value. Solana is super centralized. Anyway, and who's playing here? Engineers, investors, regulators and banks. This is how we connect to the real world, and central governments who are shitting themselves. Gameplay, here you vote with your energy in the case of a proof of stake protocol, or you vote with your proof of work, or you vote with your stake. And you can also communicate through those blockchains. The meaningful choice element, again, oversimplification. Are you speculating? Are you taking a punt? Are you gambling? Or are you investing in fundamental value in how this crypto economy actually changes the world. You win by having high TVL, which is a good proxy symbol for trust, total value locked. You win by building things that are really easily composed into larger solutions. And you win in the fiat meets, TradFi meets DeFi world by having rock solid compliance. How do we score in this Web3 world? The units of account are tokens, they are fiat, they are real world assets, and how they get wrapped up in tokens. How do we, what are the incentives? I mean, how do we, smart contracts effectively govern where, how that value plays out. And this is all, it's either on-chain, or it's cross-chain, or it's layer 2, or it's through DeFi. And again, bringing in an element of TradFi, which is super important here, banks. And so when you're thinking of the infrastructure of the digital economy in Web3, we're looking at the kind of Cosmos Polkadot world in which you can create funky new things. You're looking at different ways of bridging layer 1s. But actually, let's not forget the element which actually allows money into the whole system, which is kind of the point of BCB. It is to bank the crypto industry so that we can facilitate this flow of value into Web3. The theme, of course, is to decentralize everything. So what does the future look like? The next slide changes every time I write it, and actually this copy is 12 hours out of date, so there's at least 2 edits here, but here we go. I think rules, in the next era we have global protocol standards. I mean, Ethereum has already done a fantastic job of setting the bar. It's not, but it is Ethereum. Let's see what emerges there. It is regulations that are properly cross-jurisdictional. Right now, you can do certain things in certain countries, but that presents a problem for crypto, which is effectively borderless. Autonomous governance. This is code is law, and code is transparent. I think we are definitely moving to a space in which we have less 4-year political term-driven governance. The setup. I think one of the essential bits of the setup will be everyone and everything and every business having a single, globally recognized, unique ID in a decentralized way. I think value expressed in money or tokens or assets will be ubiquitously embedded. So part of the layout of this future, I think, is a far greater degree of connection. And of course, everyone can play. In Web 1, Web 2, and Web 3, you see increasing the borders are becoming softer. I think the borders become even vanish in a Web 4, Web 5 world. Everyone can play. The gameplay is thinking about the user experience. What do we want that's really sticky in this? What are the problems in this iteration of digital infrastructure? It's quite hard. It's quite technical. There's still a lot of friction to get in and out. So I think I'd love to see a space in which engaging with the digital economy is as easy as talking. I think choosing which layer of the Maslow hierarchy, and I'm not going to, which layer of the Maslow hierarchy is your business addressing? Is it the bottom, is it the shelter, or is it all the way at the top for the self-fulfillment? Gameplay will be about businesses that focus specifically on those layers. It's just my model. I'm just fucking speculating. But it fits the board. And then the result of that, if we can gamify addressing each layer of that Maslow hierarchy, we get less uneven prosperity. Don't read too much into that. Scoring, arguably, what blockchain has brought us is trustlessness. If we start to think about trust as a unit of value, then you can see businesses that accumulate size not based on AUM or anything, but as how widely are they trusted? What is the quality of the network? And to match up to what we're building for different layers of what we as humans need, scoring incentivizes appropriately at each of those levels. And how do we make sure that that is shared across participants in Web3? Inclusion, I think, is the broadest term. Now, the theme that underpins this is one I keep flipping around on. On this version, it is trust. I think that's a bit woolly. I think it's a bit wishy-washy. I think maybe everything and everyone is connected is probably a more meaningful theme for what Web 4 and beyond looks like. That's my last slide, don't worry. That was my last slide. So that's how I view the evolution of digital infrastructure using a board game as an analogy. I've stretched the analogy a bit, but I think it's useful because it does actually capture the essential elements of how we get shit done. Yeah, thanks.
But hold on, don't go anywhere because we're going to have a little bit of a chat.
Awesome.
When we look at BCB Group, certainly from a venture perspective, you're a really good point of contact to understand which way the market is going, almost like a testing board. When you look at what's happened this year with regards to the Celsius, the anchors, and probably some of your clients or potential clients, what type of conversation are the institutional asset classes that are coming in to deploy capital having with you? Because you're a great barometer for that. You're very much involved in crypto, but you're involved in the integration of a lot of the business banking. So what are the common concerns that a lot of traditional type businesses that want to enter in crypto are having with you guys? And how do you answer that and explain? And also looking at just what's happened in the last 24 hours, Oliver.
So what I'm seeing a lot of, especially from an institutional quality conversation, is a kind of, not to us, but to the wider crypto economy, a we told you so kind of vibe. So TradFi has got decades of being able to take risk and manage risk. Crypto has got 10 years of life, and it's got really good at taking risk, but it's forgotten the super basic bits of managing risk. 3 hours Celsius, the kind of the credit issues, what is the counterparty risk? When you send somebody your cash, manage it. If you're taking a position in which you have spot risk, market risk, manage it. So there's like spot risk, there's credit risk, all of these things that are basic building blocks in TradFi that are still so far behind in crypto. So I think for what we're starting to see in our clients who are succeeding are those who have a bit of gray hair and who do know what good risk management looks like, and it's going to be those who punch through to the next stage. And
ultimately, how do you view what's happened in the last 24 hours with regards to Binance and FTX? Is it any concern with your business? Do you position yourselves in any other way? Or is this just something which is happening in crypto Twitter in a way? But love to get your take on it. And if any of the audience have had any exposure to FTX, or you haven't been able to withdraw any funds, or you've also got any information on it that you'd like to share or ask any questions, please jump in. But I'd like to get your take on how you see things unfolding.
The experience of having a big-ass Luna position earlier this year was traumatic.
Okay.
The experience of having a personal account at Celsius and any of those is traumatic.
Okay.
Just like it was traumatic having any a subprime mortgage 15 years ago. So I think there is that trauma that we have to be sensitive to. But what's so cool about crypto is that these traumas play out over days.
Yes.
We watched Lehman Brothers fail over months.
Yes.
Signals showed up over months.
Yes.
And now, I posted something on our Slack last week. Hey, something's up. Sunday night, Monday, Tuesday. It's insane. But this is traumatic because it's positive, because this rapid failure gives us a space to improve and do it better again.
Yeah. So it's almost. And I don't know the details on FTX, but I certainly know a lot about Celsius and what happened with Anchor, Luna, Terra. Do you think it's almost a cleansing of the decks before we move higher? No one wants to see anybody, particularly a PA investor, lose any money.
Right.
But do you think that this is important for us to move higher and to have this cleansing?
I wish it weren't necessary, but it kind of is. And I hate seeing these awesome projects that are really have great intent. I hate seeing them fail, but those ones that have ignored conventional wisdom, hedge your fucking risks, are getting washed out. And these washouts are necessary for a robust growth. And it's the only way we're going to get to a properly sustainable crypto future, is if we take the time to learn the lessons from history and build better.
Would you say that it was fair to assume that all traditional decentralized finance, the proper DeFi, the compounds, the makers, the Aves, actually performed exactly like they should have? And if there was any built-in smart contract liquidation, that it occurred at the point of that contract being built? And actually, when you looked at the very DeFi core elements, they actually performed exactly like they should have.
Right.
None of them went down.
Code is law, and the code worked in those instances. Sometimes it doesn't. But to your point, I think there's a spectrum of DeFi quality. And the ones that I've noticed that are surviving, like Aave, are built by not just fresh engineers who are super smart, but they're built by lawyers and business people and people who've got a bit of experience. Like the Aave protocol, if you dive into it, it's as you know, the backstops for rapid liquidation events, for gap risk, they're there. The lockup of value so that you don't get run on the bank scenario that kills you, they're there. Of course, you do need to have integrity as well. You can't just have the code, and I think we've seen examples this year in which all funds are back one-to-one, and you look under the covers and they blow up, and they weren't.
How do you navigate through a landscape whereby crypto is so correlated right now, and so we'll have an issue with a Luna, or we'll have an issue with an FTX, and the whole market, because it is highly correlated, will unwind? I understand that some of that will be margin calling, and in any type of traditional financial asset management, when you've got to reduce your book or you got to meet margin, you'll sell everything across the board. But certainly when you look at some prices which were totally unrelated to the FTX portfolio, you're starting to see crypto across the board being down.
Yeah.
I mean, how do you think about that from an investor's perspective?
I think about it on a 10-year time scale. And I'm seeing the cycles, or I'm seeing the dips are higher than the previous dips. And I know that, as you know, and as most people here, because you're here because crypto, this is irreversible. So there is a trend in our lifetimes, the 10, 20, 30-year view in which these things build quickly and they build better. So this is a horrific shitstorm, and we haven't seen the last of it in the next few weeks. And it won't be the last on the 5-10-year scale, but again, do you agree? I mean, it's irreversible. Where we are now, the crypto world, the pace of development massively, dramatically outstripping the pace of development in TradFi. You can't reverse that shit.
Absolutely. I think from our perspective, there's two things going on at Swissport Ventures. One is the price action, which is driven by sentiment, which is driven by fear and greed. We've just seen a lot of fear in the market. The other thing, which is way more interesting, is the tech build-out.
Yeah.
And that goes from bottom left to top right.
Keep building, yeah.
At Swissborg, all we've done over the last 12 months is continue and ship new products. And that's been reflected in our token
I can't
price.
keep up, you guys are amazing.
Yeah, so it's the engineers that keep on building. And ultimately what will happen is the price action will catch on with the execution and development. The same thing happened in the .com space, right? There was a lot of hope. Markets got ahead of themselves. They recreated, 90% of stocks fell 90%, and then we started to build base, and then we started to have profit. So you could have PE ratios and cash flow forecasts, and you could have comps and execution and followers and users, and the business and the tech world started to form its own industry, and we're going to start to see that in crypto.
Yeah.
I suppose what's difficult with crypto is that although we're pre-IPO, we've still got a 24-hour ticker tape stock price, which drives and catches everybody's attention and reflects on days like we've seen in the last 24 hours very, very clearly.
I couldn't agree more. I haven't slept since 2018, 24 hours. But look, with just a few minutes left on the clock, I just want to maybe... so this is the third bear market I've been in. I think probably the same for you.
Third or fourth.
What's going to get us all through this is grit. It's going to be hanging in there. It's going to be like just keep building. Do what Swissport are doing. Do what we're doing. Just like build, like, don't lose sight of that North Star. What's the point? Why are you here? What is that North Star? I can express it from what I think it is and what drives me in BCB. Do you have a view of what the ultimate crypto North Star is? So I can...
Yeah, absolutely. I think it's the decentralization of everything, right? The tokenization of the world as we see it. You know, that doesn't happen overnight, and it doesn't happen by one initiative. It happens gradually. And I think people are always saying, hey, you know, this has failed and this hasn't worked, the markets are down. But actually, you're looking at where we are today. I look at where we've come from and how quickly we've done that in the space of time.
Oh, God, yeah.
And when you start not looking at just one industry sector, but you're now looking at the ability to tokenize real estate, like Simon said earlier on. We're looking at the ability to have decentralized finance. We're looking at the ability to have the creator economy and be remunerated. We're looking at metaverse. We're looking at the store of value. Like, this is just not one industry that is being disrupted. This is the world as we know it and the attention going forward for the youth of today. So things don't happen overnight. I think about it generationally. I know that we will be on the right side of history, but of course we're going to have these speed bumps which are going to be very, very, very hard and difficult because it's attached to price emotion, and that's difficult to see people lose value in certain aspects.
Agree. That's a way more articulate way of putting what I often express it as, which is we're upgrading money fundamentally, we're upgrading economy, we're upgrading governance, and we're decentralizing everything. I think that if we can focus on being part of that change, which is a generational change, then all the ups and downs in the middle don't really matter. Let's fix money, and let's fix value. It's so awesome working in this industry.
Before we let you go, I have one thing. Because we're at TOKEN2049 here in London, and you guys are operating out of London, how do you find working and building the business which is focused on digital assets here in the capital of the UK? And what's it been like to do that? Because I'm sure you could have got offered to go off and incorporate everywhere, to have your head office. How do you find operating your business, and what's the positive sides of that?
I'd be lying if I didn't say it was challenging working in a UK regulatory environment. But the FCA are looking at it in the right way. What we need to create is an environment in which we're proving ourselves that this is a legitimate economy, and we must take every opportunity to feed back education and information to the FCA so that they can keep up. At the moment, it is easier to do business in Switzerland, in Germany, in France, in the US even, in the crypto space. But the FCA are looking at it the right way. We just need to give them a little more love and a bit more resource and bring them along the journey. I don't mean that to sound patronizing. There's an education deficit that we are in a position to fill. And let's do that, because the UK is awesome. We have a great crack at being the digital financial center of the world.
Let's do it. Oliver, that was awesome. Thank you for the keynote.
Thank you
for the conversation. A big round of applause for Oliver. Thank you so much. Thank you very much. Thank you.